We're back talking about liquidity. Okay, now this is a big video to watch. Liquidity is one of, if not the most important thing that moves the market in the direction that it goes. Okay, 90% of traders have liquidity in their strategy, and 100% of traders that are profitable know what liquidity is and know how to mark it out and knows how price plays off of different liquidity points. Okay, so what is liquidity? That's a great question. Liquidity is the points in the market where there are limit orders, there are limit buys, limit sells. Liquidity are the points in the market where it's going to take people out of their trade or put them in. So it's going to take them out of the market and put them in. So if I have a sell limit at this point of liquidity, I'm selling and I'm taking someone else by taking their buy order out of the market. Okay. Now, you are not important to the market. Okay. I hope you understand that. The banks, the big banks, all right. You go to New York City, you see the bull. You see the bull and its big old, you see the bull? Those are the people moving the markets. Okay. And they know how to hunt liquidity like no other. So all the market's doing all day long is hunting different points of liquidity. So learning how price reacts off of different points of liquidity is one of, if not the most important part of trading. So you need to learn how to point out different parts of liquidity. So what I'm going to do right now, liquidity in the simplest terms is highs and lows. Okay, where price wants to go, where price wants to tap in, grab those buy orders, and go the other direction. So right here, I'm going to point out a liquidity sweep. Okay, so on the screen right here, this is the 15-minute time frame. You can see we are clearly in a bearish downtrend, right, for a while. This is the 15-minute, so this is a big move, right? When you see this move to the upside, a lot of people would just buy, right? We're switching direction. We had a break of structure, so we must be buying, right? No, we need to see liquidity swept, okay? So we retest here, and we come back, and we take out this recent sell side liquidity. Now, in an A-plus world, right, if we swept this full sell side liquidity, that would be awesome, right? But it doesn't matter because we're still sweeping this sell side liquidity. So all that's doing pretty much is everyone that was in a buy, right, is in it here, and at this point of liquidity, at this low, they're probably getting stopped out. Okay, whether it is a break-even trade or not, it doesn't matter. And everyone that's trying to buy after we take liquidity here are taking all of sell orders and turning them into buy orders to take off into the market. So we have a million buy orders right here. Okay, where everyone in the chart is waiting right here for liquidity to sweep so they can take their buy and go. Okay, but it's not that simple because you'll see a lot of liquidity sweeps that end up not playing out and going in the other direction. Why is that? Because you need to wait for confirmation. Okay, we talked about order blocks, we talked about breaker blocks, we talked about a break of structure. Now, a lot of people's strategies are combined with a liquidity sweep and a break of structure. Okay, so I'm not going to get into break structures in this video because we have a video on that already, but this liquidity sweep is valid because we swept liquidity. We then had a break of structure paired with a 15-minute inverse fair value gap and a 15-minute fair value gap. Okay, I don't want to overwhelm you guys with information, but what I'm looking at right now is a liquidity sweep, okay, that we're respecting. We swept liquidity. We have a 15-minute inverse. We have two 15-minute inverses. Then we have a 15-minute fair value gap right along a 15-minute EMA cross, okay? And we are going to get into EMA a lot in this class, but for now, we'll just stick to liquidity in this video. But we have all these buy orders down here, right? Gets tapped into. We get confirmation. We say we hopped in along after even this. Or even if you wanted to do this, say we gotten along after this fair value gap right here, okay? And we like to size small. If you're trying to take long trades and not scalps, we like to size small. So I would have my stop below this fair value gap, which is also below this inverse fair value gap, right? So if that trade ended up going in that direction, we would just be wrong, and that's okay. Sometimes you will be wrong in the market. Now, let's liquidity hunt, because what the market's doing, it's hunting liquidity, because the market moves off of liquidity. So let's see different spots in this chart that we could have put our take profit, right? We have inner buy side liquidity right here. 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 Look at all these spots in the chart that we could have put our take profit to. So that, even if we target that, right, that's a 1 to 1.3 RR. Now let's look. Oh, look over here to the left. We have more liquidity. I wonder why it went higher. We have liquidity right there. Okay. Look what we go do. We go take out that liquidity as well. Okay. And now this is a good example of disrespecting liquidity. Okay, guys, we are in such a uptrend right now, right, that shorting this would be a gamble, right? We sweep all of these inner buy side liquidity, as including buy side liquidity, our top buy side liquidity over here. Why don't we reverse, right? We swept everything up here. Why don't we reverse? Well, I'll tell you why we don't reverse. Because if we look at, and I'm telling you right now, I haven't even looked at this spot of the chart yet, but let's look at the 1 hour. Okay, if we look at the 1 hour time frame, look at this. We are in a clear bullish trend, and we have been forever, okay? I don't know who put that on my chart, but let's get that out of here, okay? Let's go back to where we were, wherever we just were. Okay, so look at this. Let's look at this setup real quick. We swept inner sell side liquidity, okay, after a break of structure, because we didn't make a lower low here in a downtrend, so that's a break of structure right there. We proceeded to sweep inner sell side liquidity, okay. Now on top of that, we have one inverse fair value gap right here. We have another inverse fair value gap right here. I don't know why we're lagging so bad right now. We have another inverse fair value gap right there, right? So that's 2 levels of confirmation right there. We have a break of structure, okay? You could even consider the bottom of this fair value gap a break of structure. We then have a huge fair value gap, right? Which this isn't 100%, guys. Nothing is 100%, because a lot of the times when you have a big fair value gap like this, price does kind of want to come rebalance this, which even if we did come down and rebalance this, our stops were below it and we would have been fine. Okay, so say even you wait till all the way up here, to take this move, you are still getting a 1 to 1.5 risk to reward ratio that could have been, I mean, what could we have targeted here? We could have targeted, I mean, let's just see, guys. We could have got a 1 to 5. We could have got pretty much, what is this? This is a 1 to, so we could have got like a 1 to 7 risk to reward off this trade. Just from one liquidity sweep, an inverse fair value gap, a fair value gap, and a break of structure. Okay? So if there's one thing I want you to take out of this video, forget about the fair value gaps, forget about the break of structure. The market is always hunting liquidity. Okay? So the market moves based off liquidity. If we have a bunch of sell orders up here, the market's going to want to come up, take those sell orders, get the buyers out, and go down. If we have a bunch of buy orders down here, right, and we have a good strong point of liquidity down here, we're going to be moving down, and we're going to want to take those sellers out of the chart, grab the buyers, and go in the other direction. So you want to point out every little inner buy side liquidity, every point of liquidity, sell side, and you need to wait for confirmation on your trade. But every trade should be based off of some sort of liquidity, whether that's sweeping liquidity or whether that's targeting a point of liquidity, because obviously the market wants to go to that liquidity. The banks want to go and grab those buyers and take them into the market. So you want to be targeting points of liquidity. Okay, we'll get into targeting unfilled gaps in another video, but the market moves based off of liquidity. So if you want to target liquidity, if you want to trade based off liquidity sweeps, it all moves because of liquidity. We'll have a whole nother video on liquidity itself because there is so much to go over, but that's the basics of liquidity. So yeah, make sure you guys go watch the video on break-up structures, fair value gaps, and inverse fair value gaps, because that'll bring all of this together if you haven't watched that already. And we'll catch you in the next video.